Folks, LA Little here with TA Today, and today I want to look at financials, and the reason I'm looking at financials and I'm asking myself is like, is this steepening that we see here in the curve, the one that you see me showing? This is a IEF TLT, right? And you can see that the difference between these from way back here, they were almost the same, right? And since then, you've got this big steepening in the curve where the short end is showing you that rates on the short end are coming down faster than rates on the long end. And matter of fact, these are actual values, so you can see the TLT is just quote unquote breaking out right now, whereas the IEF, which is the 10-year, is doing the same. And so they're maintaining that distance between them. And I'm wondering if we're going to see, this one actually steepen more than this one. And we don't know that. And why am I even asking that? The interesting part about this is this steepens, right? That's not abnormal in a case where the market or the economy, I should say, is getting stronger. But it also is the case potentially if the economy is getting weaker and going into a recession. And so, my question is, which one is it? Are we going to take off in terms of the economy, or are we plummeting? And the way I would look at that and try to answer that is just look at the financials and see what the financials are doing. Are they selling off, or are they rallying? If they're selling off, more than likely it's more of a recessionary type signal versus if they're actually rallying on this, which would say that they're not worried about loan, defaults and things like that. They're more interested in that interest income that they're going to make, the difference between that spread. So let's look at those financials and see what they might be telling us. And so to do that, I'm going to look at just two things. I'm going to look at the XLF, which is the major large cap financials, and then I'll look at the KRE and see kind of the regional picture. If I look here at the XLF, right, this has been a long, strong, uptrend, right? This thing's been going higher, higher. One little blip here. What was that blip? Well, that was the April nonsense with Trump and the worries about tariffs and what was going to happen, and then stormed back up, made new highs. Kind of like a little doji here, but we're mid-month, so you can't read much into that. Now the weekly, a little bit more interesting because last week you saw this thing close at the lows, but you see it kind of coming back here. And matter of fact, if we put a retest regen up here, you can see coming back into that retest regen, it's broken out once before up here. Let me get the drawing tool. It's broken out once before up here. Came back and did the retest in this area. Broke back above it, right, regenerating. And now it's fading back in there. Now, if it fades back in, the rule of thumb is about 2/3 to the way down, even if it's going to hold. Now, if I go look at these big bars back here, 2/3 would bring you back into this area. And so that's a pretty steep decline on something that doesn't move a whole lot. Now, if I go over to the daily, here we can actually see that huge reversal that took place on Friday's unemployment number. And a lot of people jump to the conclusion, well, recession, right? Well, maybe, but we got to give it just a little bit of time and see what it does. I don't think you just assume it's recession. Now, if I throw the retest regens up here, what you're going to see in this particular case is it's holding so far that retest regen on this higher time frame, and you want to see it hold that. If it gives that up, which is quite possible, then that's telling you that what was up is no longer up. And so you got a situation where this move that's been going on is going to change to something more like that, or potentially go to the downside. So this is key. For right now, this is the main tell. Now, this is the daily, so I don't give a huge amount of weight to that. I'm more interested in a weekly. And this weekly, as we know from what I just said, You got a big wide price spreads bar here. So this thing could go quite a ways down and still be okay. And so even if this fades and starts to, head down here, break a swing point low and so forth, it's not going to be in the world. Now, matter of fact, if you go look here at the MTTFs, which is the mean time to failure of trend, this is 84.5. That's pretty extended. Where's the swing point low that it needs to break? Right there. What's that price point? Low 50s, 52, 52.5. We're way up here. And, it's just like right in there somewhere. That could easily break. Reset this, right? And then everything could turn back around and you go again. And so I wouldn't think it's the end of the world even if we get a reset here. But certainly it's something that's worth watching and seeing how it develops. And if we look over on the ABCD projections, they're all bullish right now. There's nothing that's bearish. And you've got some confirmed ones out here already that are in play. So 61.11, 56.21. So, again, everything we're looking at is telling us that this trend is probably going to continue. Although short term, we may get some backing and filling type stuff, which, given the fact that we're in September, could easily happen. Let's take a look at KRE and see what it might be telling us. Now, long term, not as strong, of course, as what we just saw over there. But, we did get a break here of that swing point high, which actually made it bullish. Got that big reset, in March. Not a reset, but a push down. And then came back up. Now, notice here, you don't have new highs. XLF, new highs. Here, you don't. So the regionals are telling us that they're definitely weaker than we've been seeing or that we just saw in the XLF. And over to the the weekly. We got a swing point high up here that is trying to get over and is unable to so far. Right at it, but just can't quite get over it. Volume kind of fading down right now. So this picture doesn't look bad. I don't see anything horrible there. If we go over here to the daily, now the daily is a nice little setup in that you've got two swing point highs that broke out. Neither one's been tested. That says more than likely you're going to find buyers in this area. So around the 64 area, or at least you should, right? Neoclassical is always about what should happen. And whether it does or doesn't gives you confirmation or an affirmation that this thing, is doing what you expect or not, which allows you to make decisions, right? So if this were, for example, to trade down and close down here somewhere, that would be bad because that's not what it should do. Matter of fact, it really shouldn't do that. The fact that you've never tested these almost guarantee that it should go right back up. And so I wouldn't, for example, if I want to short something, I definitely wouldn't be shorting this. It doesn't make sense. It's not extended. There's no reason to feel that, this thing is going to do anything other than potentially dip down in here and then get bought. And so when I look at the XLF and I look at the KRE, what they look like to me is okay. As long as they don't do anything they're not supposed to do, then we have to assume that this trend that's in place is going to continue. Yeah, maybe we'll get some backing and filling out here on the daily time frame. That's a very natural occurrence. There's nothing wrong with that. So when I look at the financials and I ask that question that I had a while ago is like, is this a recession or is this just a steady point where we take off again in terms of the economy? Right now, I'd have to say it's this latter. It's not a recession. Let's see how it plays out. Give it a week or two, and then we'll know a lot more. Okay? That's where I'm at. That's what I'm thinking. If you like these videos, give me comments, give me a like, give me a subscribe, and I'll keep bringing them to you. Have a great one.